What's up guys, in today's video I'll be showing you everything that you need to know about the smart money concept in the market, so that from this video you can be able to trade the smart money concept in the market, get to understand how it works, and get to make money trading these smart money strategies that I'm about to show you in this video guys. So let's get into the video. Let's not waste your time. In case you have watched a lot of videos about the smart money concept in the market and you still don't get to understand it, don't worry yourself anymore, because I assure you on this video that you get to understand these things and get to know how it works perfectly guys. I took out my time to create this video and I want to make sure that you all get to understand these things and get to make money from knowing these things in the market also guys. But before we get into the video, if you are new to the channel, my name is Philip Joshua, and on this channel I teach you everything about the financial market. And if you are new to this channel also, don't forget to do what? Hit that subscribe button, don't forget to like the video, and don't forget to share the video with your trading friends so that they can get to watch it and get to understand how these things works in the market also guys. So let's get to the video. Let's not waste much of our time again. So what is SMC in the market? SMC are strategies used by the smart monies in the market, which is the institutional traders in the market, the hedge fund traders, and those people that are trading for a lot of banks in the market. This is the type of strategy that they use in the market, and they make a lot of money trading these strategies in the market also. But before we get into the chart, I would love to tell you some SMC terms in the market that if you get to know, so it will make the journey easier for you. We have BOS in the market, which is breakout structure. We have POI in the market also, which is point of interest in the market. And we have Kosh in the market, which is change of character in the market. So let's get into the chart. Let's get to explain the remaining one for you. Let me get to show you my 4 powerful SMC strategies in the market that if only you can pay attention and get to understand how I trade these strategies in the market, there's no way I'm not going to be profitable in the market also. So let's get to the chart. Let's do the remaining things over there. The first smart money strategy that I trade in the market is the liquidity grabs in the market. And these liquidity grabs are areas whereby the market comes and form fake breakout in the market. Then from there the market will continue going toward the direction that the market was going to. So let's get into the chart. Let me show you how this one works in the market, so you can get to understand it and get to know what you do whenever you find this in the market also.
Alright, so here's a perfect example of this liquidity grab in the market, and I would love to explain it for you in such a way that you get to understand it and get to know how these things works in the market also. So look at this place now. I'm going to bring out my horizontal line in the market so you can get to understand what I'm trying to explain in this market right now. So around this side we have a good resistance point in the market, which is this part. I'm going to place my rectangular box in the market also so you can get to understand it faster. We expected that the market should come around that place, and from there the market will now get a retest around that side, because a lot of orders are going to be placed around that place, especially for people that use all these buy limit and sell limit in the market. They're going to place a lot of orders around that side, because that's the main place where we expect a retest in the market. So when we're expecting this to happen, the market started dropping from this side, then broke this former structure around this place. And when the market broke this former structure, we started expecting some change of character in the market. Then from there the market now came and got some retest around this place. But instead of the market to get a proper retest around this side, which we expect to be our liquidity grab area in the market came very close to that place and couldn't get a retest around that place. And around this side you can see that the market just came very close to this place, came and dropped again, just came and got a retest around this area in the market, also in the market, this supply zone. Then from there the market came, got a liquidity grab around our point of interest in the market, which is this place where we have our rectangular box in the market. And from there the market started dropping toward the downside. So when the market came and got that liquidity grab around this place, you can see the kind of candle that was formed in this side. You can see this pin bar in this place, very tiny, with this long wick in the market. It's a sign of solid rejection in the market, and from there the market started dropping toward the downside. So whenever we have areas whereby we expect the market to come and fill in, and the market just come very close to that place, expect another candle that will fill in that place, either a long wick candle or an engulfing candle coming to fill in that place. And from there the market will start dropping properly toward the downside. So when we got that feeling in the market, we get our liquidity grab in the market. Then others around this place, people that place their buy limit in this place, sell limit, sell stop limit, buy stop limit, and every other orders that is in the market, we get triggered in the market. Then from there the market now start going towards the downside. So that's how the liquidity grab works in the market. Let's get back to the video and continue.
And the second smart money strategy that I trade in the market is the order blocks in the market. And other blocks are areas whereby the institutional traders get to get their entries around. That's the place they love taking their entries wherever they want to enter any trade. So let's get to the chart also. Let me get to explain how this other blocks works in the market also.
Alright, so this is how the other block looks like in the market. And after explaining the structures for you, I will get to explain it on the chart for you also, so you can get to understand how these things looks like in the chart and get to know what you do whenever you see the structures in the market also, because you have to know the structure first before you can identify what is going to happen in the chart next. So around this place now, if the order block is coming from a selling point in the market, which is a bearish market, we expect that we get a resistance point around that place, and we get an area whereby the market just come and get a retest around. And when the market comes around that place and get a retest around that resistance point, we get candles like pin bars around that place. Sometimes we get fair value gap candles around that place. Then from there the market will now come break this former structure. So after the market has broken this place whereby we got a breakout structure around this side, then from this side we expect that the market to from there get to this point, confirming that this is an order block area in the market, and the gap between this place and this place is called an imbalance in the market, because this is an area whereby we expect the market to get a retest around. Then from there we can now get what we call order block in the market. Then from there the market will now start dropping toward the downside, because this is the place whereby the institutional traders are interested in taking their entries in the market, and we should also be expecting that place to be our area whereby we'll be expecting the market to push from. And sometimes around these order blocks, whenever the market is dropping again, we get some kind of mini order blocks in the market, confirming that the market is not going to break this main order block in the market. Then from there we get a break of structure around this place again, confirming that this structure has been broken, and we expect a retest around this side to confirm that this one is also a strong one in the market. So when we get a retest around our mini order blocks in the market, just know that from there the market is not expected to start going toward the upside again. And this gap around this place also is called the imbalance in the market. So we expect the market to come and gain its balance around this place. Then from this order block point, the market will now start pushing towards the downside. So that's how the order block looks like in the market. That's the structure of the order block. Let's get to the chart. Let's get to explain it in a better way. Alright, so this is how we get order blocks in the market. So around this place where we have a strong resistance point in the market, which is this side in the market. This is where we got our first resistance point in the market. So we expect that the market shouldn't break that place and go toward the upside again, due to the fact that we have what? We have our rally based drop in this side, and we got a retest around that side. So right now we expect what the market should come and get a retest around this place, which the market did something that if you don't get to understand it, you keep expecting that the market should get to this place. So around this side now, instead of the market to get to this place, we got a fair value gap candle around this side. So this fair value gap candle now is going to push the market towards the downside. And someone that doesn't understand it, we keep waiting till the market gets to this place, which is not going to happen again, except the market has to come back and break that place and start going towards the upside. So around that side now, we expect our order block around that place. So we're going to bring out our rectangular bars in the market, which is this in the market. Now we're going to place it around that side. So around this place where the market came and gave us a fair value gap candle in that place, we expect that area to be our order block area in the market. So looking at what happened in the market right now, you can see that the market came around that place, and from there the market started dropping toward the downside. And this is the place where we got the order block itself, because this place is just like an area where we got a proper confirmation that this resistance point was not going to hold the trade for us anymore. So around this place now where we got this proper confirmation, we expect that from that place we get our order block around. So looking at this place now, you can see this pin bar around this place, you can see this rejection candles around this place, and these are signs of order blocks in the market. So we're going to bring out another rectangular box and place it around that place, because we expect the market to start falling from there to the downside right now. So on this side now, we have a new rectangular box in the market, and we expect the market to come and get a retest around that place. Then from there the market will start dropping towards the downside. But one thing you must take note of is whenever order blocks want to form in the market, it doesn't form immediately. So around this side now, you can see that if I use this thing that looks like cross in the market, from this place the market came and broke these former structures first. So after the market broke this former structure in the market came and got a retest. It did not just happen all of a sudden. Let me place my horizontal line on that place. This structure in the market got broken. This one like this got broken in the market. Then from there the market came and got this retest around this place. So around this side whereby the market broke that structure with these candles in this place is the area whereby we'll get our retest towards this side. And this structure that was broken around this place is our what? Breakout structure in the market. So looking at this side now, let me show you something. So when the market came around that place, the market came and got a retest towards the zone whereby we expect the market to get our orders from, which is our order block area in the market. If the market came, broke this former structure and gave us a retest around this place, this could have been a very fast order block area in the market. But since the market wasn't able to break it and give us a retest around that place, this becomes an area of imbalance in the market. And what do we expect in other blocks? Other blocks are expected to come and balance areas so that we have imbalances in the market. So around this side now, we expect that the market should come and get a retest around that place. Then from there the market start dropping. And if at all the market went and broke this former structure in this place, the market is expected to change its movement to an uptrend, because this place is the major structure, which is the major resistance point that is holding this trade. And we expect that from here the market to now start dropping towards the downside. So look at what happened right now. When the market came around this pin bar in this place, this zone around the side, the market just came and got a retest around that place. Then from there the market even got another retest another side, confirming that this is going to drop towards the downside. So this side whereby the market wasn't able to break, we expect that the market will still drop towards the downside, and the market dropped from there towards the downside. But something happened around this place again, which is the fact that we got another mini order block around this place. And before we got this mini order block around this side, which is this side of the market came and still what? Broke this former structure in this side. So this new structure now got broken, and from there we got another mini order block, which I'm still going to mark out for you so you can get to understand this also. So around that side now, we got a mini order block in the market. And what do we expect again? We expect that from there the market will come and get a retest. Then from there the market will start dropping towards the downside. Looking at this place now, the market broke this former structure, came and got a retest around this side. Then from there the market started dropping towards the downside again. And around this side also is another order block area in the market. If you look at this place, you can see a lot of rejections in the market also. And we expect that from there the market will still come and get a retest around there. Then from there the market will start dropping toward the downside also. So look at what happened. This is another rectangular box in the market, and the market came another place and got a retest. Then from there the market started dropping properly towards the downside. So this market came and gave us what? 3 strong confirmation that this other block area is still going to hold in the market, and the market is going to go towards the downside. And whenever we want to take these other blocks in the market, like we want to trade it in the market, these are areas whereby we expect our take profit to be around. This place whereby I'm going to place my horizontal line right now, which is the last structure around this place. That's the area whereby we expect our take profit to be around. If we are to take our trade from this place now, which is this area, towards this side, the risk to reward ratio is very good. And if we are to take our trade from this place towards this side, the risk to reward ratio is very good. And if we are to take our trade again from this side towards this side, the risk to reward ratio is not that bad. So whenever we want to trade other blocks in the market, we use this area whereby we expect the market not to break again. We use those places as our stop loss areas in the market, because we know that if the market breaks that area, the market is invalid around that place again, and that other block is not strong enough to take the market towards the downside. And looking at this place also, if we got our trade around this place and got this retest around this side, we expect that this place whereby we have our wick around this place should be our area whereby we expect our stop loss to be around, and this place still remains our take profit area in the market. Because whenever we have other blocks in the market, we expect the market to break the former structure, then give us new structures in the market also. Looking at this place now, you can see that if we were to enter a trade around this place also, which is this side of the market, we will expect that we will take our entries around this place and we place our stop loss around this area, which is this place where we have our wick in the market. Because around that place, if the market was to break that place, we expect that from there the market will keep pushing towards the upside. But since the market wasn't able to break that place, which is this area and this place, this zone around this place, we expect that from there we just place our stop loss above that area. Then if the market kept going towards the downside, we will always expect this place, which is our last structure in the market, to be our take profit area. And from there you can see what the market did. The market came, got a retest around that place, and still got to broke this area in the market. And looking at the other mini order blocks in the market, you can see how those ones form the market also. And from there the market continue pushing towards the downside. So that's one thing about it, and if you get to understand it very well, you get to make a lot of figures for yourself also. So that's how the order blocks works in the market.
And the third one is market structures in the market. And market structures are the behaviors of the current flow in the market at that particular period of the. So whatever candle that is forming in the market is a result of what is happening in the market, and whatever the market is doing at that point, either breaking structures or creating new structures, is the result of the money that is flowing in the market at that point. So let's get to the chart also. Let me show you on how I trade these market structures also as a smart money concept in the market.
So right now, this is how the market structure looks like. And when it comes to market structure, we have SL, we have SH, we have BOS, and we have rally, we have drop, and from there we have retest again, and every other thing that needs to be on the chart, just like the way you can see them on this screen. So in this place now, you can see this SH, which means swing high in the market,
and this SL, which means swing low in the market. And we also have our BOS, which is our breakout structure in the market. But when it comes to market structure, the market will have to come break former structure, get a retest around that former structure again, then continue going towards the downside. Then when the market direction is about to change, the market will now change its movement and keep going to another direction also. But looking at this one, you can see that we have this arrow around this place, which I would love to use to explain this for you so you can get to understand it faster. So using this arrow now, let me just make it a little bit bigger so you can get to see it faster. So look at this arrow right now. So looking at this side now, you can see that the market is dropping from the upside towards the downside, and around this place you can see that there's a change of market direction. But before we have that change of market direction, around this place we have our first swing high in the market, and the market has to come and break this former structure, which is our swing low in the market. Then from there we get our break of structure. After getting our break of structure, what do we expect again? We expect the market to come and get a retest around the former structure. Then from there the market now drop to the downside again. And while the market is trying to drop to the downside, we have our new breakout structure around this place. And this place where we have the former structure around this place, which is this one that we got from this, our swing high in the market, becomes our new swing low in the market. And this retest around this place becomes our what? Our new swing high in the market also. So around this side where we have our swing low in the market will need to come around that place and break this former structure, because this is a structure in the market already. And once the market breaks it, we have our what? Breakout structure around that place. So around that side now we have our new swing low in the market, and we expect for the market to still come and break that place. Then the market will now come to the downside. So after the market broke this place, we have our new what? Breakout structure around that place also. So looking at this place now, you can see that the market is about to change its direction, and around this side we have our base in the market. Due to the fact that the market wasn't able to come break this former structure, then from there we get a new structure in the market, telling us that this is a place whereby the market wants to change its direction. Then from there we got our drop in the market, and this side which the market behaved as if it's going to go towards the upside is the place whereby we have our rally in the market, and this place whereby the market drop is our drop in the market. So from there now we expect what? We expect the market to come and break this former rally, which is the place whereby we have as a new breakout structure. Then from there the market will now come and get a new swing high in the market. So looking at this side now, you can see that the market came break this place whereby we have our rally in the market, came and got a retest around that side, telling us that this is a confirmation that the market is about to push from there towards the upside, and that this market that is selling from the downside is about to change to a bullish one. So we'll be expecting buys from this side since the market is about to change its direction. So around this place whereby the market came and got a retest around the rally, we got our retest point in the market, which is this retest you're seeing in this place, and we got a new swing low in the market, and we got a new swing high in the market. So for the market to continue pushing the market outwards, break this former place whereby we have our swing high in this place now, and we got a break of structure around that place, we got a new swing high around this place, and we got the retest to this point, which is our break of structure area in the market. We got a retest around that place, and we expect the market to still break this our swing high in this place and give us a new break of structure in this side also. So after the market broke this swing high in the market, we expect a new what? A new swing low in the market, and we have a new swing high in the market, and we have a new break of structure. So if at all we want to continue drawing the structures, we still get another swing low in this place, then another swing high continuously until the market gets to a place whereby it will have to form a base and a rally and a drop. Then from there the market direction will now change, and the market will now change its movement from either a selling market to a buying market, just like this place whereby the market changes movement from a selling market to a buying market. So that's how the market structure works in the market, and I would love to also explain it in the chart for you so you can get to understand it faster. So let's get to the chart. Let me get to explain it for you in a faster way so you can get to understand it also. And don't forget that this SH means swing high in the market, SL means swing low in the market, and we also have our what? Breakout structure, which is BOS in the market. So don't forget the meaning of these abbreviations in the market also. Alright, so here's a live example of the market structure in the market, and I would love to explain it for you in such a way that you get to understand it faster. Just let you have marked out everything for you, and I'll be using this arrow to explain it for you so you can get to understand it also in the market. So on this side we have our swing high in the market, we have our swing low in the market, we have our swing high again. But let me get to explain it for you so you can understand how I got this swing high and swing lows in the market. So look at this place now. This is a new swing high in the market due to the fact that the market is coming from the downside. That is, we are in the downtrend, which is a bearish market also. So around this place we have our first swing high in the market, we got our swing low around this place whereby the market came, break this former structure around this side, then give us this new swing low in the market. And around this side, we expect the market to do what? Rise towards the upside again. So the market came very, very close to this side, got a new swing high in the market, and the market broke this former structure around this place.
and give us a new breakout structure in the market. That's how we got our BOS around that place. And after then, the market fell from this place where we have our swing high in the market and dropped toward this downside before it got under the test for the upside. So this place where the market came around becomes our new swing low in the market, and around this side whereby the market rise to again because our new swing high in the market. And around this place whereby the market broke after forming this swing high in the market is called our breakout structure in the market. And from there the market continued going toward the downside, and from there we got our base around this place. But before we got this base in the market, look at what happened in the market. There's a structure around this side. Instead of the market to get a proper retest around it, just like the way others have been having retest around and not breaking the former structure, then from there the market now start dropping towards the downside again. Instead of the market to get that proper retest around this place, the market came, broke that place. So after the market broke that place, which is this former structure in this side, around this place now we'll be expecting that there's a new change in market direction due to the fact that the market is not following the former method or the former format that the market was using in order to drop toward the downside. So around this place whereby the market came and got a new swing high in the market, we expected that the market will change its direction because it did not follow the former format, and from there the market got a new structure around this side, telling us that the market is going to change its direction. So around this place whereby the market now dropped toward the downside, we expected that place to be our base because the market has given us sign that there's a new direction that is coming up, and this place is an evidence that there's a new market move that is coming up. So when the market came and got a base around this place, we expected that the market will just come and rally around this place, then get a drop towards this side whereby we have our base. So as far as the drop isn't strong enough to break the base in the market, we expect that the market to change its direction. So looking at this place now, you can see that this drop wasn't able to break the base area in the market, and the market just came around that place, got a retest. Then from there the market started going towards the upside, and due to the way we used to trade in the market, this place whereby the market fell from towards the drop side becomes our new retest area in the market, and we expect the market to come and get a retest around there. Then from there the market will start pushing towards the upside continuously. Then we understand that there's a new market structure in the market. So around this place now, we got some candle that showed us a retest around this place, which is this pin bar candle in this place. It wasn't strong enough to keep the movement going, but it just came and gave us a sign that there's a market that will come back around that place and give us a retest. Then from there the market will now start going towards the upside. So looking at this place now, this is an area in the market whereby we got a lot of rejections, and these rejections around this place is a sign that the market is going to push towards the upside. So instead of the market to break this place now and come and get a retest around this place, the market came and gave us this pin bar around this place, telling us that this place is tested already, and we expect the market to just come and get a retest around that pin bar around that side. Then from there the market will start pushing towards the upside again. So looking at this place now, look at what happened. Around this place whereby the market came and formed a pin bar in the market came, gave us a new swing high in the market, and from there the market came and got that retest. And around this place whereby the market got the retest is called our swing low in the market. And around this place whereby we expect the market to break this new swing high in the market is the place whereby we're going to have our breakout structure. And when the market broke there, we got our new swing high in the market also, and we got a new swing low in the market. So we expect the market to still come back and get a retest around that place. Then from there the market start pushing towards the upside. So that's how this works in the market, and it's very easy to understand. The main thing is that whenever the market forms a swing high in the market, expect that there will be a new swing low in the market, and when the market breaks that swing high in the market, expect that there will be a breakout structure in the market. And whenever the market starts changing its structure, just expect that there will be a new base, then a new drop. Then from there the market now changes direction towards the upside, especially when the market is in a support area in the market, because this market is in a support area. That's why we were able to get this our base, drop, and retest in the market. There's an area in the higher time frame that is helping us to push this market toward the upside. That's how this works in the market, and it's very easy to understand. If you don't get to understand it the first time, get to watch the video over and over again. Then from there you can get to understand how these things works and get to know what you should do whenever you see them in the market also.
And the last smart money concept that I would love to explain for you is the supply and demand areas in the market. And in this one, you get to understand the buying and selling sides of the market, so that you get to know what the market is doing when the market gets to the buying side, and get to know what the market is doing when the market gets to the selling point also. So let's get to the chart. Let me get to explain this supply and demand for you in smart money concepts.
So we have what we call supply and demand zones in the market, and this is very simple in the market also. I don't want to complicate it. I want to make the definition very easy for you, so you can get to know what we are saying in the market and get to know the things you should do whenever you want to spot these supply and demand zones in the market. So when it comes to the supply zone, these are areas whereby we expect the market to buy from, And in this one, it's not like the support and resistance zones whereby we have to use our horizontal line in the market. Just like this place whereby I can just say this is our support zone in the market. Then if the market just break that place, we will not use that place again. It doesn't work like that when it comes to supply and demand zones in the market. So the supply and demand zones in the market, we make use of rectangular boxes in the market, which is this box in the market, and we check it out like from all of this area now, which is from this place till this place in the market. This is the area whereby we have our supply zone in this market. So let me drag it out very well so you can get to see it. So from here to here is where we expect our supply zone in the market. So if the market breaks this area right now, we expect that this supply zone is not strong enough to keep the market going towards the upside. And whenever we have supply zones in the market, what we expect is that the market should come and break the former structure, which is that place whereby the supply zone starts from. Looking at this place, you can see this side, the market whereby the supply zone starts from. So we expect that the market should come and break that place. Then we just take our take profit around that side. That's how the supply zones works in the market. These are just areas whereby we expect the market to get around. Then from there we get to buy in the market. And when it comes to our demand zones in the market, like this place now whereby we have an area whereby we expect the market to sell from, which is this side of the market. Looking at this place now, you can see that the market just came very close to this former structure around this place, which is this resistance point in the market. We got a new strong resistance point in this market, and when it comes to this one, we got some kind of retest around the side, telling us that the market should come and get a retest around this place. Then from there the market now push towards the upside. And if you look at this place area, you can see that this place was liquidated in the market. We got a liquidity grab around that place. There's an area whereby the market was expected to come and get its final retest around. Then from there the market just came, got that liquidity grab around that side. Then from there we got the market rolling towards the upside. So look at this place now, you can see that our supply zone around this place got broken in order for us to get a proper confirmation around the side. Then from there the market started pushing towards the upside. And look at this side whereby we got this move from the upside towards the downside, which came and got this retest around this side. So this move that we have around this place, we're going to place our rectangular box around that place, which is this area in the market. If you look at this side very well, you can see that this is an area by the market got a proper retest around, came and still got a retest again, confirming that this is going to be a bearish move towards the downside. So around that place now, we got a retest around that side due to the fact that the market has broken this structure already, which is this former structure around this side. Then from there we do what? We expect the market to come and get a retest. Then from the retest, the market will now start pushing towards the upside again. Because whenever we want to trade the market, we expect market to break former structures, get retest, then from there the market continue pushing towards the upside. If the market is going towards the upside, and if the market is going towards the downside, the market will still have to behave like that. So that's one thing you have to keep in mind also. So when the market came around this place, we got our demand area in the market, and from there the market sold from that area, which is the all of this zone in this place. The market sold from that zone, and from there the market kept dropping towards the downside until we got a retest around this place. So this place where we got a retest in the market right now is another new supply area in the market. Look at the all of that zone in this place now. So from here to that place is like a supply zone in the market, and the market came and got a retest another place. So from there now, what do we expect again? We expect the market to start pushing towards the upside. So that's how the supply and demand areas work in the market. Let's get back to the chart. Let's get to complete it what we're doing in the video, guys.
At this point, I believe you have learned a lot of things about the smart money concept in the market. And if there's any side that you don't get to understand, download the video and watch it over and over again until you get to understand how these things work in the market. And from there, you get to make more money for yourself and get to trade the right way also. And don't forget, if you're new to the channel, make sure you hit that subscribe button, make sure you give this video a like, and make sure you share the video with your friends so that they can get to watch the video and get to understand how these things work in the market also, guys. So that's it for today, guys. See you in the next video. Peace and love.